Hey guys, welcome back to my channel. Today I'm going to start with some information from the World Economic Forum. And if you don't know what the World Economic Forum does, well, the forum engages the foremost political, business, cultural and other leaders of society to shape global, regional and industry agendas. If you don't know about the Great Reset, you should check in Google or in the World Economic Forum. You should look for the Great Reset and you're going to find some really interesting information about it. But the main thing that I want to talk about related to the World Economic Forum is actually this map here. So in the section Strategic Intelligence, there is a map, and in the center is actually blockchain. Actually, it is very interactive map, so you can check different levels of this map. So you see, if I click on financial and monetary systems, then this topic is in the center and you can check different sections and related topics, children topics to these different sections here. So let's go back to blockchain actually, and let's see what the information under tokenization and digital assets. So, according to the World Economic Forum, digital representations of value on blockchain open up new possibilities for finance and asset ownership. So here you see that actually tokenization and digital assets is related to, actually here we can see the related topics: banking and capital markets, arts and culture, cybersecurity, innovation, agile governance, fourth industrial revolution, real estate, Internet of Things, digital economy and new value creation, financial and monetary systems, civic participation and internet governance. And let's see what they're saying here. The intersection of automation and digital assets has enabled a so-called decentralized finance, or DeFi, ecosystem which can potentially automate many of the processes deployed by centralized and often costly financial intermediaries for the purposes of lending, exchanges and derivatives. Blockchain technology can also introduce new asset management models if and when tangible and movable properties are registered and tokenized, that is, mapped with digital reference to valuable or sensitive elements for security purposes. For example, fine art and real estate could each theoretically be tokenized, making the management and ownership of these potentially pricey assets possible on-chain. In such a system, professional agencies could be relied upon to oversee the digital management of properties and shape specialized markets for their trading, which could function much like existing financial markets. However, new and sophisticated rules are needed for the next generation blockchain-based economy, and they will have to be adequately enforced in order to help ensure the stability of digital markets and to bolster the legal protection of consumers. And when we are talking about tokenization and digital assets, we have to mention here the Stellar network and the XRP ledger. So you know that on the Stellar network you have the ability to issue assets, and in a few simple operations you can create Stellar network tokens. The possibilities are endless. Any asset can be tokenized, and once tokenized, transferred or traded over the Stellar network quickly and cheaply. Since any account can issue an asset on the Stellar network and anyone can set up a Stellar account, anyone can issue an asset. Banks, payment processors, money service businesses of all stripes, for-profit enterprises, non-profits, local communities, even individuals. It's a self-serve process, no permission needed. And of course, on the XRP ledger, you can also issue assets. All currencies other than XRP can be represented in the XRP ledger as issued currencies. These digital assets, sometimes called IOUs, are tracked in accounting relationships called trust lines between addresses. Issued currencies are typically considered as liabilities from one perspective and assets from the other. So the balance of a trust line is negative or positive depending on which side you view it from. Any address may freely issue non-XRP currencies. And we know also that the Flare network is going to bring smart contracts on the XRP ledger. And maybe you think that the Stellar network is far behind the XRP ledger because the Stellar network doesn't have the smart contract capability. But let me first share with you this news from Velo official. We are thrilled to announce our partnership with Visa. Through this strategic partnership, Velo Labs, LightNet and Visa will collaborate on payment solutions in Asia. Velo tokens will serve as the digital asset collateralizing financial solutions. And this is actually the article from Velo Labs. Velo Labs Technology Ltd has announced a collaboration with LightNet Group and Visa Worldwide to jointly develop payment solutions in Asia. This is really great news. Velo Labs, LightNet Group and Visa to collaborate on payment solutions in Asia. Velo tokens to serve as the digital asset collateralizing financial solutions with a memorandum of understanding in effect between the parties. Velo Labs, LightNet Group and Visa will collaborate on payment solutions aimed at addressing the underserved micro, small and medium enterprise lending market in Asia. The International Finance Corporation estimates that globally $5.2 trillion in MSME lending goes unserved annually, with more than half of this financing gap existing in the Asia-Pacific region. Velo Labs, LightNet Group and Visa's partnership extends the reach of all three firms by allowing near real-time global transactions between participating banks, money transfer operators and other financial service providers. Okay, so near real-time global transactions. This is very good. And about Velo Labs' mission is to build a federated credit exchange network powered by the Velo protocol. The Velo protocol is a financial protocol that issues digital credits pegged to any fiat currency and ensures that these digital credits are always collateralized by the right amount of Velo tokens to maintain a one-to-one digital credit to fiat currency value ratio. Backed by Stellar Network and CP Group, Velo Labs is currently serving business partners in Southeast Asia. By connecting the legacy finance, CeFi and DeFi industries, Velo Labs Federated Credit Exchange Network positions Velo Labs as one of the few blockchain projects with a clear path towards mass adoption. About LightNet Group, maybe you know, LightNet is a Singapore headquartered fintech company with the purpose of empowering underbanked populations and SME trade finance with an inclusive international remittance ecosystem, the LightNet Group adopts the Velo protocol as its blockchain protocol and positions itself as the next generation clearing and settlement network across the Asia-Pacific region by leveraging blockchain and connecting existing financial systems with its network of cash agents and wallets. The LightNet Group's initial focus will be on Southeast Asia remittances, which it estimates to be in excess of $150 billion per annum. Okay, and about the Velo. Velo is a blockchain-based financial protocol enabling digital credit issuance and borderless asset transfer for businesses using a smart contract system. I think that this was missing in the article, that it uses a smart contract system, and this is very important, and now I will show you why. And you should know that with Velo as a partner, the Stellar network actually has smart contract capabilities. So this is the architecture of the Velo protocol. Velo consists of a collection of protocols and software objects that make up the components described so far in this paper. It pulls inspiration from various blockchains and software systems to achieve its goals. Velo is a set of smart contracts which are used to issue digital credit on an extension of the Stellar network called EveryNet that supports smart contract functionality. The Velo token is issued on the Stellar blockchain network, which is used for Velo tokens transaction settlement and clearance. Velo tokens and the digital credits are ordinary Stellar assets, subjected to all the rules and semantics of all Stellar assets. Stellar provides a solid foundation for maintaining a robust ledger of account balances. However, Stellar does not support the complex smart contract semantics necessary to build the entire Velo protocol on top of it. Hence, the smart contracts can be built using any smart contract platform such as Ethereum, Tendermint, or EveryNet, an intelligent financial service platform. And this is actually the GitHub repository of EveryNet Labs. You see that there are almost 12,000 commits, many contributors, over 400, and they are working hard, as I can see here. So really interesting. Let's continue with the white paper here with the section for the architecture. Okay, so Velo protocol will utilize a cross-chain protocol called WARP, co-developed with EveryNet to provide a bridge between two different blockchains. Stellar blockchain, designed for real-time, reliable digital assets movement, and a smart contract chain, which provides the ability to deploy and execute smart contracts in order to build the digital reserve system. I will make a follow-up video about the Velo protocol because it seems really very interesting and it has some specific details that deserve to be explored. Moving the Stellar asset to a smart contract chain. To mint digital credits through the Velo protocol, Velo token as an ordinary Stellar asset must first be transferred to a smart contract chain in order to lock Velo tokens on DRS as collateral for the digital credit. Velo uses WARP protocol to move Velo tokens from the Stellar chain to a smart contract chain. So this is similar, of course. There are many differences, but it's kind of similar to the Flare network and the XRP ledger. So Stellar are not behind the developments related to the XRP ledger at all. They are really going further with this partnership. Very interesting. While front ends will be connected to the WARP protocol, they are also connected to a smart contract chain to facilitate trusted partner interaction with the DRS smart contract. And here you see that they're showing the mechanism of swapping assets between the Stellar network and the smart contract chain using the WARP protocol, the every WARP protocol. I will, in the follow-up video, I will make more detailed analysis of the Velo protocol and the smart contracts chain. It's going to be really interesting to see in more details how things are working together. And here in this video I won't dive deep into technical details, and it's going to be too long. So let's go to the use cases. Cross-border remittance, payments, lending, loyalty points, and in summary, Velo aims to create a decentralized settlement network that allows partners to transfer value safely and securely between each other in a timely and transparent way. It uses Stellar to increase liquidity and transaction volume, and it has a robust feature set that enables trusted partners to interact effortlessly with each other and offer services across physical and digital barriers. The Velo token acts as collateral to ensure settlement, representing the value of digital credits and fiat deposits in the network. The many phases of development are designed to test, improve, and perfect the functionality of the Velo network while adapting to the changing marketplace and needs of our business partners. Phase 1 will focus on deploying a bulletproof core system that stands against the test of active high-volume money transfer transactions among a limited number of partners. Phase 2 will introduce a decentralized crypto exchange that will promote liquidity for all digital credits and Velo token pairs and allow the community to confidently grow. Phase 3 and 4 will focus on adding new financial products that can serve the underserved and underbanked community, like decentralized lending. This stage of development will also seek to decentralize the governance of the Velo protocol, as well as build out cash in and cash out points for digital credits and Velo tokens. Velo will build real-world use cases for the Velo tokens and digital credits. Through its network of partners, Velo has the physical and digital reach to improve the lives of millions of underbanked and underserviced people by providing fast, affordable financial services powered by innovative technology, connecting non-traditional and traditional financial institutions together into a seamless web. In the end, Velo seeks to create a global decentralized settlement value transfer system that can be used as the backbone of a new paradigm for delivering financial services to the world. So, all in all, really great news for the Stellar network. Basically, the Velo protocol is bringing smart contracts on the Stellar network. And this is really huge news. And I want to finish with this article from Christine Lagarde, The Future of Money, Innovating While Retaining Trust. This was from yesterday. Important lessons can be drawn from the past to understand the factors influencing the journey towards the future of money, including the possible introduction of a digital euro. Ensuring the euro meets the needs of European citizens is at the core of the ECB's mandate. Technological progress. As we enter the digital age, the nature of money, but also of goods and services, is changing quickly. Digitalization and technological advances are transforming all areas of society, accelerating the process of dematerialization. The coronavirus pandemic has accelerated these trends towards digitalization, with a surge in online payments and a shift towards contactless payments in shops. About the digital euro, the ECB wants to ensure the euro remains fit for the digital era Early this year, the Governing Council decided to explore the possibility of issuing of a digital euro, digital central bank money for retail payments, in other words. But why issue a digital euro if other forms of private digital money are already available? Central bank money is unique. It provides people with unrestricted access to a simple, essentially risk-free and trusted means of payment they can use for any basic transaction. But for retail use, it is currently only offered physically and in the form of cash. A digital euro would complement cash and ensure that consumers continue to have unrestricted access to central bank money in a form that meets their evolving digital payment needs. It could be important in a range of future scenarios, from a decline in the use of cash to preempting the uptake of foreign digital currencies in the euro area. Issuing a digital euro might become necessary to ensure both continued access to central bank money and monetary sovereignty. A properly designed digital euro would create synergies with the payments industry and enable the private sector to build new businesses based on a digital euro-related services. A digital euro would also be an emblem of the ongoing process of European integration and ultimately help to unify Europe's digital economies. Of course, there are risks that crypto assets pose. Although stablecoins could drive additional innovation in payments and be well integrated into social media, trade and other platforms, they pose serious risks. And here notice that they're actually talking about Facebook's Libra. You know that Facebook's Libra announced that they're going to launch a digital dollar in January. So this is kind of a limited version of Libra. They're going to launch digital asset that is pegged to the dollar, to the US dollar. So of course this is a threat for the euro, because if people are going to use the digital dollar because it is going to be easier and convenient, more convenient to be used, they're of course going to ditch the euro, and they're going to use something that is more convenient and easier to use through, let's say, Facebook's Messenger or WhatsApp or whatever. And this presents a threat to the European economy, of course. And the ECB doesn't want to give up power. So, in my opinion, they're going to move on next year with the digital euro, and they're going to announce that they're going to issue a digital euro. I think that they're going to announce this in the beginning of next year, but when are they going to actually issue the digital euro? I really don't know. Let's continue with the article. If widely adopted, they could threaten financial stability and monetary sovereignty. For instance, if the issuer cannot guarantee a fixed value, or if they are perceived as being incapable of absorbing losses, a run could occur. Additionally, using stablecoins as a store of value could trigger a large shift of bank deposits to stablecoins, which may have an impact on banks' operations and the transmission of monetary policy. Stablecoins, particularly those backed by global technology firms, the big techs, could also present risks to competitiveness and technological autonomy in Europe, as they would attempt to leverage their competitive advantage and control of large platforms. Their dominant positions may harm competition and consumer choice, and raise concerns over data privacy and the misuse of personal information. Some say that money is memory. It seems that this memory is becoming increasingly digital, but consumers' digital data and records must not be misused. The abuse of personal information for commercial or other purposes could endanger privacy and harm competition. these and other potential risks are being assessed by the Eurosystem and European institutions. So I think that here they're also talking about Facebook and their new venture, Facebook's Libra. You know that when you use digital payments, you're leaving trails behind, and all of your actions are being recorded. So you know that data is power, and Facebook has a lot of data about you and actually about billions of people on the planet. And I think that for Facebook being able to gather more data about you, including financial data, this is going to give them even more power. And they're one of the biggest, if not maybe not the biggest, but one of the biggest tech companies in the world, and they have a lot of resources and really advanced technologies and algorithms. So they're using big data and analysis. So this is going to give them really big advantage. And of course, the ECB and the European Union don't want to give up power, and they want to keep up with the technical innovations. And of course that they should protect the financial sovereignty of the European Union. So they're really concerned about Facebook's Libra, and they're going to move on, in my opinion, with the issuance of the digital euro, because otherwise the euro is going to die. So they have to modernize the European financial system. And let's finish with this. Despite all the changes I have mentioned, the foundations of money remain intact. People accept money only if it is highly trusted, maintains its value, and respects privacy, an aspect that is becoming increasingly important in the digital age. These foundations have been and will continue to be found in central bank money, irrespective of the form it takes in the future. And yeah, I really think that Facebook's Libra presents a big danger for the European Union and other countries and central banks. You know about the scandal with Cambridge Analytica and their improper use of Facebook's data for political purposes. So imagine if Facebook has your financial data and all your financial transactions recorded and analyzed. You know that at the moment Facebook is very good at manipulating people. So imagine what is going to happen if they have the financial information about over 1 billion people on the planet. Okay guys, that was it for today. Thank you very much for watching. Please like, subscribe and share. Be safe and see you next time.